Hello and good day to you all wherever you may be. It's a real pleasure to be announcing today a session where I will be pleased to act as moderator. My name is Daniel Akinmade Emejulu. I'm joining you from Geneva, Switzerland, and I'm joining you today on behalf of the Global Fashion Agenda Copenhagen Fashion Summit 2020. And specifically, we're looking in this session at redesigning value, looking beyond shareholder value. We're really pleased that you chose this particular breakout session to join, and we are looking forward to a really exciting discussion in the next 30 minutes. A few housekeeping rules just before I move on and introduce the panelists. We want to let you know we will be recording this live, and it will be hosted on the Global Fashion Agenda's website after this event. The other suggestion really is that you please use this opportunity to make it interactive. There's opportunities to put in comments, questions, ideas into the chat box, and they will be seen in a back room where somebody is working magic, and I promise you can see them and can feed them to me so that we make this panel happen. So don't be alarmed if you're not seeing your questions pop up. Somebody is seeing them and will send them through. So with that, I will introduce the wonderful panelists that we have joining us today to talk about, once again, redesigning value and looking beyond shareholder value. The first panelist is Marissa Pagnani McGowan. She's Senior Vice President of Corporate Responsibility at PVH Core, the organization behind Tommy Hilfiger and Calvin Klein. And she will be talking to us really about the emerging construct of stakeholder capitalism in the context of the fashion sector, and really how do we extend the range of actors who we consider stakeholders. Second, I have with me Dr. Sally Uren, OBE. She's the Chief Executive of Forum for the Future. That is an international sustainability nonprofit that's working with businesses, they're working with governments, they're working with civil society to explore how the fashion sector can accelerate its sustainable intentions and its sustainability objectives. Last but not least, I have Sakis Kotsantonis, who is the managing partner at KKS Advisors. That is a strategy consulting firm focused specifically on the fashion industry. And just to check that, we have indeed Marissa, Sally, and Sakis with us.
Yes, hi.
Hi, everybody.
Thank you very much. So because we're short on time for this, I'm going to really just go directly into the meat of this discussion. And we talked about earlier, this is the panelist you're seeing here. We had a discussion earlier about the IMF's Christine Lagarde's former managing director, describing the work of the IMF as requiring a mixture of heart, of brain, and of wallet, putting together financial resources, intellectual capital, and a corporate sort of citizenship, a corporate care to the work they do. And we said, doesn't this have applications for the work of redesigning value in the fashion sector? And we believed that it did, and we thought that would be a great way to frame this discussion and to explore as a filter all the nuances we plan to pick up during this session. And so with that in mind, I'll go first to the other key point for us, I think, just to emphasize, is that the global fashion agenda has done great work to show that the sustainability trajectory for 2030 is not promising in the fashion sector because of the growth of the sector and because of the current practices. And so given there's this, desire to be sustainable, to work within planetary boundaries, to make sure that there's prosperity and it doesn't come at the cost of human well-being, we need to rethink the desire and the need to have more stakeholders included in a prosperous model and a prosperous fashion of the future, fashion sector of the future. And how do we finance this is another key part of this discussion. It's all well and good to have these intentions, but the financing is really, really critical. So with that, I want to hand first to Marissa, who will speak to the sort of wallet and brain elements. And the opening question I will have for you, Marissa, to cover this is, who are these wider fashion stakeholders in the emerging construct of shareholder capitalism?
Thank you, Daniel, so much. And thank you to Global Fashion Agenda for having us and putting on a panel on this critical topic this is very timely, I believe. So to start with, I would say anyone within a company that's running a corporate responsibility program or is closely involved with the corporate responsibility efforts or sustainability efforts of their organization is going to be dealing with a wide range of stakeholders. So just to give you a bit of an example, we have internal and external stakeholders that we're thinking about all the time. So internally, it's not a small or mighty, group of passionate people within an organization that drive change. It's your colleagues in the executive group with a vision. It's our board of directors in terms of oversight. It's our supply chain colleagues who are driving so much of the change in the part of our value chain where impact is most intense. It's our sales and merchandising teams as they think about what a consumer wants and how we're going to most effectively engage with them. It's our marketing teams and it's our design and product development teams. So you've got this whole ecosystem, and I'm probably forgetting many of them. You've got a really large internal ecosystem. I would be remiss if I didn't shout out, my finance and accounting colleagues who audit every data point we put out in reporting. Our human resources teams who are driving so much of what we're doing internally around inclusion and diversity. So you've got this huge internal ecosystem of stakeholders that you want to be managing and working with in order to drive real systemic and sustainable change within your organization. Externally, you have a whole nother group of actors where you're looking at, for us, we license some of our products. So we have to make sure that the same values that flow through our own products flow through our licensed products. You have your suppliers who are a critical partner in terms of helping you to develop technology, innovation, and the products we want to bring with production processes that match those values and targets we've set. You have civil society who we're engaged with probably daily in different regards to push us forward, to help us learn, to find issues within the supply chain, challenge our thinking. Governments, industry associations, investors, all of these groups make up this ecosystem of internal and external stakeholders that we are regularly engaging with and trying to design, learn from, and contribute to the change we want to see. What I would say in this new construct, as we're talking about stakeholder capitalism, these aren't new stakeholders, right? I mean, we've had to answer to investors and communities and suppliers. That's not new. I think the difference is moving from a risk management model where we did what we did because we thought it was the right thing to do. We thought it was better for business, and we believed we could, help move our company and our industry in the right direction. So we're doing that maybe behind the scenes. I think now there's much more opportunity to engage. So I'm moving from a risk management to an engagement model. And I think sometimes we talk about opportunity. I prefer to say engagement. I think there's more interest and willingness to engage with our consumers, our financial institutions, our investment community in a different way. And our suppliers, honestly, I think it's a way that takes a better understanding of how business and sustainability are inherently linked. I'll give you one example. If we want to have a demand-driven model, that's good for business. It's great for sustainability, right? We don't want excess inventory. We don't want to carry that as a company. We also don't want to carry that as a member of this ecosystem in this society. So I hope I answered the question, but I did want to start with sort of the current ecosystem that we've been engaging with and historically been engaged with. Think about a maturity model that's moving us from doing things maybe behind the scenes and from a risk mitigation perspective into more of an opportunity and engagement. And in this realm, I'm particularly excited about our work with governments, because I think we as business have a critical role to play. We believe we have a big responsibility to drive the change we want to see. We also believe, though, that we cannot do this alone. So that ecosystem we've established with civil society and governments, it's really figuring out, can the policies incentivize the behavior we want to see? In talking differently with our financial institutions or investors, are we speaking in a language that resonates with them, where you're getting the sustainability and financial benefits of our actions? So I hope that opens it up all right.
You certainly did open it up well, and I take from that a lot of brain power in working with various stakeholders, internal and external, and seeing where it makes sense to continue to develop policies and incentives that promote sustainable outcomes. And I also see the wallet power there in saying, look, this also makes sense financially. Who wants to have excess inventory? That doesn't do well for even just our financing, and seeing the engagement opportunities around that. So it's not just incidental or tactical, it's strategic. So thank you very much. And we will come back to those points. If we can pivot now to the heart and to Dr. Sally. And Dr. Sally, in your context at Forum for the Future, looking across all these stakeholder groups, and particularly businesses, I guess, because they are the core of this conversation. What are sort of the practical steps that you've seen companies can take or want to take to emerge into this capitalism 2.0, a more responsible capitalism, given this moment we're in 2020?
Thank you very much. And thank you, CFS, for the opportunity to take part today. It's great to be here. Practical steps that companies can take to pivot to capitalism 2.0. I think there are at least 8, and I wanted to share with you that 8-point plan, if you will. And if you're listening carefully to the first letter I use as I describe this, it creates an acronym. And there'll be a prize if you can figure it out. You probably won't be able to, but anyway, it'll just make sure you pay attention. So the first thing that I think organizations can do to pivot to capitalism 2.0 is a P, and that is P for purpose. I think it's really critical that organizations have an inspiring and credible change-making purpose. And that for fashion organizations could be framed around providing sustainable fashion in a way that puts more back into society and the economy than we take out, more back into the environment. So sort of net positive framing around that purpose. But the purpose could go even further. It could be a purpose around restoration, of regeneration of supply chains. And that is really exciting because we know that we need to do more than just being less bad. But the purpose also could work at a lower level. It could be around creating fair and resilient supply chains. So that's the first action, P for purpose. Number 2, A is for ambitious 2030 sustainability targets. Every organization needs a set of these goals, strategic pillars, and they need to be super ambitious, and they should definitely include a number that are currently unachievable, because that will stretch innovation and stretch the imagination. Number 3, T is for transparency. We need greater transparency across the value chains. We need to make sure we publicly disclose sustainability data, which will allow other shareholders, stakeholders to really understand how to drive greater performance. E is for end procurement practices that only focus on extracting maximum value at minimum cost, and shift to models that are actually about creating value, particularly environmental and societal value, encouraging regeneration across the supply chain. That's number 4. Number 5, D is for decarbonize, decarbonize, decarbonize. We need to strip out fossil-based fuels out of supply chains and ensure that all the energy that we use is from renewable sources. Number 6, S, for scale circular practices, scale sustainable alternatives to raw materials that have got a heavy environmental footprint. Number 7, A, absolutely agree with Marissa. A is for advocate with governments, for bolder policy frameworks, for bolder action to really drive the change we need to see in this industry, encouraging higher standards of regulation. So A is for advocate with governments. And then again, echoing Marissa's opening point, Number 8 is G, and that's galvanize the entire sector behind groundbreaking solutions. So that's the wider ecosystem, it's civil society, and it's investors. So that's my 8-point plan. If you're paying attention, that actually spells Padasag, which is not a real word, but it's an acronym for Pagaste, which means to pay to settle up. And so this is a plan that we can settle it with nature and society to really ensure a different form of capitalism that works not just for the economy, but for nature and society.
Thank you very much for that, Sally. I think that really does capture it all. If anybody comes up with anything that is not included, I will be personally and professionally surprised. I really like the idea of ambition that is seemingly unachievable, because it then stretches companies, stakeholders to do more than they would have otherwise done. And I think that, when you talk about the need to galvanize and decarbonize, these are really urgent calls in 2020. If I can just do a quick follow-up question for you, why do you think there's urgency to do this now? Is it really about doing it from the heart? Are there other motivations companies can stand on to take these 8-point plans?
The reason why now is the time to do this is very much related to the time we find ourselves in. COVID has disrupted absolutely everything. It's transforming the very systems that we rely on. On the one hand, that is deeply disconcerting, it's really unsettling, it's got huge negative impacts. However, this is a major moment of systems transformation. And because everything is shifting around us, then actually adopting this 8-point plan right now could actually deliver systemic change and deliver the emergence of the systems that we know we need to solve for climate, address structural inequalities, and transform the economy. So now is the time we need to do this.
Brilliant. Thank you very much. And last but not least, Sakis, you were involved in a study at KKS Advisory that looked at the Business Roundtable and was featured quite prominently in the New York Times. And I guess the takeaway around that was the virtue of ESG reporting, and really looking at the extent to which ESG reporting has intentions and it also has outcomes. And sometimes intentions don't always match outcomes. So in the spirit of talking to that as another aspect of this 3-part dichotomy wallet, what are the takeaways there? People want to invest in ESG outcomes, but sometimes it's not always as they imagine. What are the takeaways?
Thank you, Daniel. First of all, thank you for inviting me to participate. This has been fascinating already. I'm going to try to bring the first letter on Sal's acronym, the purpose, with the maturity model that Marissa was describing, and assuming that not all companies are within that frame of maturity where practices are diffused across the company. So what we do know is that to issue a public announcement where you pledge that you serve all stakeholders in a purpose-driven company is probably the easiest thing to do. Few people understand what that means or how to actually measure a company's success in delivering on that purpose. So who's to hold you accountable? And in all likelihood, unless things go really wrong, you can keep on doing what you were doing without major repercussions. But here comes 2020, and as Sally has just described, things changed a lot, right? So we have the global pandemic, we have a make or break here that companies that claim to be purpose-driven, taking care of their employees, their supply chains, and so on. So we need to test how they respond in a moment of crisis, especially with respect to relationships between employers and employees and business and society. And for too long, we didn't have the data to do that. And that it was a data problem. We didn't know how to follow progress, but we're slowly getting there. And what we did is we actually analyzed a sample of companies from the S&P 500 and FTSE Euro First indices. And we used data from a data company called True Value Labs. And we used as a measure of corporate purpose businesses that, as you said, signed up for the roundtable statement on purpose of the corporation. So that happened in 2019, and a lot of big companies signed up declaring that they will protect the interest of all stakeholders. Their statements immediately hit the headlines. They had the 180 CEOs backing this up. It was equally fast that the headlines from our research came through, because what we found is that to be a signatory is not enough. It signals intention, but unfortunately, when we start tracking what you have done, especially right now where things are still developing, evolving, and you have the opportunity to actually show how you fulfill that purpose, you not follow through with actions. So number one thing that we found is that there was no real relationship between companies signaling and companies acting. We also found that companies that have a consistent positive track record of effectively managing those issues, and we looked back 5 years before the crisis, they continued along the same lines. They actually remained faithful to their promises to protect their employees, protect their supply chains, protect their business models, and so on. And that study was across sectors, so there was no industry or sector bias. But I do want to keep a few positive notes there, right? There's a lot of companies that do very well, and there's a lot of companies that reached out to us and they said, you missed the point because there's more that we do that is not being communicated through our reporting. And Marissa touched on that, on the effort to report. So one of the things that I do want to emphasize and kind of like live with companies out there is that, in a sense, you need to take control of the ESG data narrative and communicate the material issues across stakeholders. This doesn't have to be just your investors, but don't just wait third-party providers, raters, and so on to describe your business model accurately if you're not going through that effort. Now, because as I said, we have evolved a lot, there's a lot more information that you need to share. How do you create value for stakeholders? Where's the performance data? Sally spoke about ambition. Where's your targets? How do you meet your targets? How is the board overseeing performance on your purpose? Is this aligned with corporate strategy? And so on. So, you know, the key point here is that companies that do well, they don't do well by chance. It's a conscious effort over time, and this needs to be communicated.
Thank you very much. Thank you. We're coming into our final 10 minutes. And so I just want to pose some questions that I think have fed well into this, that will feed well into this discussion. And then we can open it up for a wider sort of interaction. And my first question really is to you, Sally, and it's really thinking about how plausible is it that companies will build back better? There's a lot of discussion around this moment and the need to build back better for what comes after the pandemic. How plausible is that? And in the fashion sector specifically, who do you think will help to determine new stakeholders in redesigning value?
Thank you. Yeah, I think building back better is both plausible and possible. To understand how plausible, I think we need to understand the different pathways that are emerging right now out of this crisis. And that's something that we've been looking at for the last few months at Forum for the Future. And we can see a number of different pathways emerging, each characterized by a slightly different mindset. So there is a pathway that we're calling compete and retreat. That's the continued rise of nationalism. The mindset there is that there isn't enough to go around. We need to look after our own. There's a trajectory called discipline, which is a mindset of actually public health protection comes first. We will use surveillance to make sure that we keep our individual citizens safe. And then there's a trajectory called transform, which is characterized by the mindset of planetary health equals human health equals economic health. And this is a trajectory where we see the scaling of new business models, the scaling of regenerative agriculture. We see the widening out of the values of the economic system to include environmental and social value creation. The point is that all three are emerging simultaneously, and how plausible building back better for fashion will depend on how much attention we pay to that transform trajectory, how well we can embrace that mindset of planetary health does equal human health, does equal economic health, and understanding that even if we find ourselves in discipline, heavy tech controlled trajectory, strong government intervention, even if we find ourselves in compete and retreat, the rise of nationalism, the breaking down of multilateralism, by understanding the mindsets that are in these different possible trajectories, we can then plot a pathway to transform. So if we pay attention to transform, if we ensure that everything we do is aligned with a transform trajectory, if we hold that mindset, planetary health equals human health equals economic health, then I think building back better is very plausible.
Thank you very much. And just in Picking up on two of the things you said, you know, the rise of nationalism, the breakdown of multilateralism. Marissa, if I were to ask you, there's a moment now where people are realizing the need to future-proof against so many shocks, against so many risks and potential disasters even. And it's been, I think, highlighted by all the headlines of 2020, the pandemic, racial inequality, human rights, climate change. What needs to be done for this future-proofing to happen, you know, and for these steps to be taken to make good progress on all those fronts?
Well, I'll start by saying, I think we all came into 2020, and whether it was the UN or many partnerships within the fashion space, all talking about the decade of action. Maybe the last decade we were getting more aware of the issues, the interconnectivity of the issues. We were figuring out what that means for our different businesses and how we could set targets and take actions. This coming into 2020, we said this is the decade of action, and obviously COVID-19 came in and put a wrench in many plans, and obviously made us step back and ask ourselves a lot of questions as society. I would say, in terms of the future-proofing piece, I think what we've seen with COVID on the sustainability side is certainly an acceleration, and lots of different theories as to why that's happening now. Is it because, as Sally mentioned, the fragility of our systems? Is it, as Sakis mentioned, we now have better data and can hold ourselves accountable in different ways? Is it because we want to have agency when so much is going on around us? Is it because we want to use our wallets to reflect the values and change we want to see in the world? For whatever reason, we are seeing a real acceleration in sustainability trends with COVID. And I think a lot of what we had been on the path to do as an industry, it was the right start, but maybe we're looking to sort of raise all the ships at once in an incremental way. It now feels like someone hit the fast forward button on a number of the initiatives that we thought we could do, but now feels like it has to happen. It has to happen if we want to engage our associates within our companies. It has to happen if we want to work, you know, and engage with our consumers in a meaningful way. So what is that thing? What is that thing? And I think the thing that will accelerate is we could take Sally's 8-part plan. I could point to any of those, I think, but really, I think we've seen things like the ILO call to action on garment workers. The great thing, and we were, as PVH, very active in the beginning of that coming together, was first you got to double down by the companies saying, yes, we're going to pay for our goods in progress. Second was, let's see what capital is out there, you know, being financed through the system that we could access for the purposes of ensuring, you know, less impact on our supply chains and the communities that are around them. Third thing was, how do we do this differently in the future? Really, you know, we do not want to be in this situation again. So how do we make sure we have a work stream within this and a commitment by the companies up front to say, we do not want to end up in places with social systems and protections that do not exist, so that we are left scrambling. You know, this was as much a business continuity issue as doing the right thing, protecting our suppliers and their communities. So I think you see examples like that where we're seeing, okay, we have an immediate need and we have a recognition that there's a challenge within the system that we want to address. Last thing is same with biodiversity, regenerative materials, and the like.
Thank you very much, Marissa. I think that's not very comprehensive overview that I would not want to be in your situation now, Sakis, to add to that. But if I may still put you on the spotlight, in the last 4 minutes we have, could you just tell us some key financing sources for how this agenda could happen? It's great to have the right motivations, heart, brain, wallet. It's great to meet the moment, but how can this be financed? Is it things like the Adidas bond, sustainability bond? Is it insurance? Is it long-term sources of capital? How can this be financed?
This is a great question, because all this, in order to do all this, we need money, right? In its finance, and there is, depending on where you are, you're a startup or a mature organization, we could be talking about different options. But I'm going to focus on 2 or 3 very specific things. One is growth capital and private equity. So what we have seen is that growth equity, traditional private equity firms are increasingly getting interested in financing some of these solutions. I know that the Carlyle Group, which is a major private equity firm, has made an investment in a machinery company in the fashion industry, and it was the first that kind of investment in the fashion supply chain. And also, I want to emphasize options that are within the ESG debt financing front, and this could be green bonds, sustainability, social bonds, sustainability link bonds, and so on. So there's different financial instruments right now that are very useful, because they emphasize how much of a strategic priority your corporate sustainability is. It improves the visibility to the initiatives that you're having from investors and the general public. But it also requires a level of sophistication on the metrics to actually select projects and also track performance against those projects. So in a sense, it gives a lot more transparency in the market. And I have seen, as you said, the Adidas is one example that's a very successful issuance. There has been more examples in the market. There's the Prada example, where they did the deal with Crédit Agricole for, I think it's a 5-year, 50 million sustainability linked loan. And that is related against certain sustainability targets. So the mechanisms are getting there, and the interest in this type of financing are increasing over time. Actually, the market for sustainability linked loans.
Sorry, just to respond to that, I hope that if there are private equity investors out there, they take your word and they invest in this opportunity. I hope that they follow Sally's 8-point plan. And I really hope that they see the need, as Marissa is doing, to work both internally and externally, because it really will require collective action in the fashion sector and beyond to meet this moment. So we have exactly come out of time, and real pleasure to each of you and to everybody for joining. Thank you again to the Global Fashion Agenda, and real pleasure for this Copenhagen Fashion Summit 2020 session. Thank you all very much.
Thank you.
Thank you.
Bye.